For centuries, Britain's financial landscape was dominated by towering institutions founded in a bygone era. Names like Barclays, HSBC, and Lloyds, established long before the digital age, controlled the banking sector with an iron grip. But something remarkable happened in the 2010s. A financial revolution quietly began, one that would fundamentally challenge the status quo. Tech-savvy upstarts, armed with sleek mobile apps, exposed the mediocrity of traditional banking services. These challenger banks revealed how consumers had been settling for outdated systems and poor customer service for decades. The question is not whether this revolution will transform banking, but rather how quickly traditional banks will become obsolete. Challenger banks are not simply new financial institutions. They represent a direct assault on a system that remained virtually unchanged for generations. The £45 billion valuation of these upstarts proves their disruptive power. Traditional banks relied on imposing physical branches designed to project authority and power. Challenger banks eliminated this entirely. Legacy institutions buried simple services under convoluted processes. Digital banks made everything available in 3 taps or less. This is why 50 million people have already abandoned traditional banking models. The data shows customer acquisition rates 8 times faster than legacy banks. These aren't incremental improvements. This is a fundamental reimagining of what banking should be. Revolut stands as the undisputed leader of Britain's banking revolution. Its £45 billion valuation makes it Europe's most valuable private technology company. Revolut gained 50 million global customers in just 8 years. Traditional banks took centuries to reach similar numbers. The most shocking fact? Revolut only officially became a bank in 2023. For years, it operated in regulatory gray areas while traditional banks complained about unfair competition. Revolut CEO Nikolay Storonsky dismissed these concerns while pursuing aggressive global expansion. This strategy generated both spectacular growth and serious vulnerabilities. Auditors have questioned Revolut's internal controls. A growing number of scam victims report difficulties recovering funds. The company's compliance systems have struggled to keep pace with its meteoric growth. Yet investor confidence remains unshaken, with an IPO potentially valuing the company even higher. Is this confidence justified, or are we witnessing dangerous regulatory arbitrage? While Revolut captures headlines, other challengers have built formidable market positions. Monzo achieved a $5.9 billion valuation with 10 million loyal users. Its customer satisfaction ratings outperformed every traditional bank for 4 consecutive rankings. From February 2023 to August 2024, no other bank could match Monzo's customer experience. Its iconic hot coral cards became status symbols among young, digitally savvy consumers. But Monzo's recent slip to second place in customer rankings signals potential trouble. Can rapid growth coexist with exceptional customer service? The historical data suggests this is nearly impossible. Starling Bank presents an even more compelling narrative. Valued at £3.3 billion, Starling was founded by Anne Bowden, a self-described 5-feet-tall Welsh woman in her mid-50s. In an industry dominated by male London elites, Bowden created Britain's most stable challenger bank. Starling consistently ranks in the top 3 for customer satisfaction. Its business banking services have captured significant market share from established players. Yet even Starling faces serious challenges. The Financial Conduct Authority imposed a £29 million fine in 2023 for inadequate financial crime prevention. This penalty represents the largest ever for a challenger bank. It exposes how even well-intentioned challengers struggle with complex compliance requirements. Customer experience innovation alone cannot solve regulatory fundamentals. Britain's challenger ecosystem extends beyond the market leaders. Zopa, valued at £1.1 billion, reveals a fascinating trajectory in financial innovation. After pioneering peer-to-peer lending in 2005, Zopa abandoned this model in 2021. This reversal came despite facilitating over £5 billion in peer-to-peer loans. Why? Regulatory pressure pushed Zopa toward traditional banking models. This transformation demonstrates how innovation often surrenders to established frameworks. Metro Bank's story serves as a cautionary tale for the entire sector. Launched in 2010 with political support from then-Chancellor George Osborne, Metro was Britain's original challenger. Its initial public offering valued the company at over £1.6 billion. Today, Metro's value has plummeted to £824 million. An accounting scandal in 2019 exposed fundamental flaws in its business model. Metro's decline proves that early success guarantees nothing in this highly competitive landscape. Adam Bank provides a refreshing counterpoint from outside London's financial bubble. Based in Durham, Adam implemented a 4-day workweek in 2021 that continues today. CEO Mark Mullen declared this approach isn't progressive, it's bloody logical. Adam's employee retention increased 70% after this change. This willingness to reimagine organizational structures demonstrates genuine innovation beyond just digital interfaces. The newest challenger banks are differentiating through purpose-driven models. Tandem, valued at £468 million, positions itself as the green digital bank. Unlike greenwashing efforts from traditional banks, Tandem exclusively offers sustainable financial services. Its loan book directs 100% of funds toward climate-friendly enterprises. Green home improvement loans, electric vehicle financing, and energy-efficient mortgages form its core products. This model directly challenges the 150-plus billions that UK banks still invest in fossil fuels annually. Crew represents perhaps the most radical reimagining of banking ownership structures. Despite its modest £158 million valuation, Crew's vision extends beyond digital interfaces. CEO Andrea de Gottardo aims to create a predominantly customer-owned institution. This neo-building society model challenges fundamental assumptions about who banks serve. If successful, it would reform not just how banking works, but who ultimately benefits from the system. Griffin, licensed in 2024, exemplifies the newest evolution in the challenger ecosystem. With £145 million in backing, Griffin provides banking infrastructure to other companies. This banking-as-a-service approach could scale more rapidly than consumer-focused alternatives. By embedding financial services in non-banking applications, Griffin expands the challenger model beyond traditional banking boundaries. JP Morgan's Chase UK represents the established industry's response to challenger innovation. Since its 2021 launch, Chase UK has accumulated 2 million customers and £15 billion in deposits. This growth rate exceeds many pure challenger banks. Chase combines challenger bank interfaces with the stability and resources of a global banking giant. This hybrid approach may ultimately prove more sustainable than pure challenger models. When traditional banks finally embrace digital transformation, will independent challengers maintain their advantage? The data suggests customer loyalty remains surprisingly weak across the sector. Britain's challenger banks have fundamentally transformed customer expectations about banking. The days of accepting poor service and limited functionality are over. Yet significant questions remain about the sustainability of many challenger models. Regulatory requirements will inevitably increase as these institutions grow. Customer acquisition alone cannot justify multi-billion-pound valuations indefinitely. Profitability remains elusive for most challengers, despite massive customer growth. The revolution has begun, but its ultimate winners remain unclear. Will pure digital banks prevail? Will traditional banks successfully transform? Or will hybrid models combining digital capabilities with institutional stability dominate? For consumers, the key question isn't whether to embrace digital banking. It's which institutions will deliver on their promises of better service while providing genuine security. The statistics are clear. 62% of UK banking customers now use at least one challenger bank, but only 4% have fully abandoned traditional institutions. This revolution remains incomplete, and its final chapter is yet to be written. This has been another deep dive from Fintech's Fair Play, bringing you the unfiltered truth about digital finance. Remember to subscribe and hit the notification bell to stay informed about the rapidly evolving financial landscape.